The things that you can't control, don't worry about. Your identity is not in the things that you can't control, but the things that you can control. You have a moral obligation to go all in.
Creating a future that's bigger than your past, you get to decide what comes with you from your past and what doesn't. When you get crystal clear on what exactly it is that you truly want, your brain immediately gets to work on making it real.
How you live your life and realize that we will die someday, and people are not going to care about your money or your accomplishments. They're going to care about the impact that you've had on their life.
What I'd like to do is just share with all of you that, you're definitely in for a treat this evening. I am extremely honored and grateful to be joined by my dear friend, strategic partner, amazing colleague, Caleb Guilliams, who is the founder of Better Wealth and a strategic partner, an organization that we just love working with. And I've got to share with you something that is very important to both Caleb and I. And the end asset, the whole framework is going to be shared with you this evening. And so as you're hearing Caleb and I in conversation and the education that we're going to share, I want you to be thinking in your mind, implementing the process and whatever it is you're choosing to do financially, whether that's investing in real estate, whether it's investing in cryptocurrency, whether it's buying a business, expanding a business, whether it's purchasing vehicles, buying properties, paying for weddings, education, whatever that may be, implementing the process and doing those other things. It's not an either or. And I'll never forget meeting Caleb for the very first time. We were at the 2016 annual Infinite Banking Think Tank Conference in Birmingham, Alabama. And I had just finished speaking on stage. There were several hundred authorized infinite banking practitioners from all across North America in attendance. And this young man approached me afterward and said, "Hey, Jayson, my name's Caleb, and I'd love to get to know you better." And we shared an extended conversation at that event about our journey with the process of becoming your own banker, the infinite banking concept. We talked about our beliefs. We talked about our future ambitions. And since that day, our relationship has only blossomed into a true friendship and strategic partnership between our two companies. And I am just eternally grateful. And I do have to say that without our mentor, the late R. Nelson Nash, the developer, the pioneer of the process of becoming your own banker, the infinite banking concept, I personally would never have met Caleb. And for that, I am truly blessed and owe a debt of gratitude to the late R. Nelson Nash. And not only is Caleb one of the most intelligent, honest, and truly authentic people that I know, his organization, his teammates, as impactful in the results that they create for other people. The end asset can be the difference between a lifetime of financial bondage or a lifetime that is predictably abundant. Which one would you choose? And I'll tell you that a predictably abundant financial life is not only peaceful and stress-free and far more gratifying, but it also allows you to focus on what really matters. And that's being with your family. That's being of service to others. That's helping others to create, abundance financially in their lives as well. And so how would you feel if you achieved a stress-free, peaceful financial life? What feelings would come up for you? Relief, relaxed, in control, freedom, secure, like a great father, blessed? Without further ado, I want to bring into focus the creator of the end asset, the author of the end asset. I'm blessed to be a co-author of the end asset for Canadians, where we changed some language on about 5 pages in the book and said, now it's the end asset for Canadians. And so it was a really tough endeavor to be a co-author of that. But without further ado, please join me in welcoming my dear friend, Caleb Guilliams. Caleb, take it away. Kick us off this evening.
Oh my goodness.
And then just bring me back in when I can support and add some value to our attendees. I can't wait for our conversation tonight, but please go ahead and take it away, my friend.
I am incredibly grateful to be here. I am I'm a better human being because of you guys and your organization. So you're probably looking at me, and if you might be a little bit familiar with my backstory. If you're not, I'll share in a moment. But I literally looked like I was a 14-year-old child when I first met Lowe, and he's speaking on the stage, and I'm sitting in the back of the room, knowing enough to be dangerous, like knowing enough to be like, man, I believe there are certain things that I know to be true, and I don't know that much, but I know that like this could literally be a game changer for the people that I know and I love dearly. And Jayson, you lead a life of gratitude, and we did something very special, and I'm sure you remember that talk, but we wrote R. Nelson Nash a gratitude letter,
We did.
and we're able to read that to him. And I'm just incredibly grateful for that. And I know if you don't know Jayson's story, I would very much encourage you to go back to some archive and hear your story of just who you are as a person, because you have an incredibly successful business, and your team has served so many people. And I've heard so many amazing success stories, and yet you're a better human being than you are a business entrepreneur. And so I'm just grateful to be here. Again, this is also fun because a lot of times when we give presentations, I'm using a PowerPoint presentation, and we're going through, and obviously that's a lot of fun, and there's a lot of good points that are going to be made. But I gave Jayson a call 2 days ago, and I said, hey man, I really, really don't want to use a presentation on this presentation. I want to be able to look in the camera and speak and share my story and some things that I'm seeing right now in the world that we're in, the craziness that's going on. And I believe there's some powerful things that need to be shared. But then I also believe that like we have this thing called YouTube, and there's a lot of incredible presentations, and my presentation is recorded, and I know that's going to be shared with everybody that stays in attendance. And I also believe that there's going to be some amazing free gifts as well that get shared with everybody here. But I just want you to know, like, I am here to be of service. And if I can transfer a couple nuggets or things that have literally made my life and changed Jayson's life, what does financial freedom look like? And it's just something that really warms my heart. So I want to ask a question, and I would love participation. And the question goes like this: what is your definition of wealth? Okay, I want some participation because it's going to set the stage on everything that we do. I'm going to share something that is going to literally stick in our brains. Okay, the definition of wealth. When most people think about wealth, they think about money. They literally think about dollar bills. And by the way, this is fake, but got stashes of fake money. They literally think of money. And it's interesting because our definition of wealth is a sum total of your time, your talents, your relationships, and your resources. We've all known someone who's on their deathbed or had a terminal illness, or maybe had horrible relationships, and it did not matter about the money in their bank account. What's interesting is Warren Buffett is worth over $100 billion. That's an obscene amount of money. He's also over the age of 91 years old. Who would trade places with Warren Buffett today? I bet you majority of people would not be willing to trade places with a person worth over $100 billion. Ladies and gentlemen, wealth and our financial strategies are so much more than money. And yet in the financial world, everyone's focused on just the dollar bill. We talk about rate of return and ROR and do this thing and this mutual fund and all these strategies. And at the end of the day, we're selling our soul for some financial metric that you've just admitted that you don't even care about. If we are on a macro level, not willing to trade places with someone worth over $100 billion, and the reason why is look, we have relationships, we have time. Some of us are a little bit younger. And so I want to paint the picture and build the foundation with that to give us perspective, because everything that we do in our life needs to be built around perspective. And there's so many things that we're going to be talking about, and there's so many hacks and strategies, and it might quote unquote sound too good to be true, but at the end of the day, it's all about how we think. And so often people are not living a wealthy life, and has nothing to do with the money in your bank account. It has everything to do with how we think. And so I hope that resonated. But at the end of the day, the goal is to build that foundation. And so I am here to serve you. This is not about me and presenting. It's about us growing together. And really, you guys are going to have some tools and some strategies that will be a game changer in your life. And I'm just grateful to be here. And so my story in a nutshell, was I'm the oldest of 6 kids. I grew up in central Wisconsin. My dad was a medical doctor. My mom was a stay-at-home mother, incredible. And I wanted to be a doctor until I took biology, and I realized that I didn't inherit my dad's biology genes, but I more inherited my mom's personality. But overall, there's a lot of good that came from just being raised in an incredible family. One story that I want to share with you is I've always been super short for my age. I've always struggled with reading, and I had like this pivotal moment when I had like this most embarrassing moment in front of my peer group, and I was short, and I messed up. I tried to read something, and I totally just sounded it out, and I looked like a fool. And my mom said something to me that you guys might want to write down. She said, Caleb, the things that you can't control, don't worry about. But the things that you can control, you have a moral obligation to go all in. And it was after I was literally in tears because I was like, I'm super short. No one will take me seriously. There was like a girl that I had a crush on that like was not interested in me after that. And I also was just frustrated because, you know, I had a hard time reading and all this stuff. And she just told me, Caleb, the things that you can't control, don't worry about. Your identity is not in the things that you can't control, but the things that you can control. You have a moral obligation to go all in. And here's the deal. We are living in a crazy world right now. So many things seem to be outside of our control. But I'm telling you that majority of our financial life and how we show up and how we define wealth is in our control.
A very good point. Everything begins with the way that we think. I think that it's also having the ability, and that is something that is developed, to rethink your thinking. And what I have been communicating to people, especially recently, is that you should be the master chef of your thinking. So when you get up in the morning, you can sprinkle in a little bit of ambition, you can sprinkle in a little bit of perseverance, a little bit of dedication. If you want to throw some negative ingredients into your thinking, you can do that too. You are in a position of total control.
Yep.
But the good thing about creating a future that's bigger than your past, which you and I are going to expand on and talk to people about, creating a future that's bigger than your past, you get to decide what comes with you from your past and what doesn't. And that is control. And when you make a choice to better your life, so the end asset framework, and you say, this is something that I want to do. I want to better my life. It's going to feel heavy. It's really going to feel heavy. And that's where most people break.
Yep.
And they return to normal when normal is exactly what was making them unhappy to begin with.
Yep.
And so being here this evening, just being present and being here 100%. This evening, you made the right decision.
And it all comes down to that decision and to that mindset. 100%. Thank you for sharing that. And so the mindset was everything. And so overall, I took that. I worked at a chicken farm. I started making money. I started asking questions about money and read a little book called The Richest Man in Babylon. And it was just blew me away that our money could start working for us. That was a concept that I didn't really fully get. And then when I'm 15 years old reading this book, and I'm like, why are people broke? Like, why are all my friends and family like struggling? And so I just made a commitment right then and there that, and I couldn't necessarily articulate it like this, but I was going to do everything in my power to help people with money. It was just something I was naturally passionate about. Got a job at a bank when I was 17. I did everything at that bank. I was the teller. I worked in our loan department. I would write commercial radio ads. I worked in our investment department, and I just tried to soak up everything I could. And fast forward 2 years, I became one of the youngest people in the country, in America, to have the opportunity to take over the bank's investment department. Now, if you think banks are crazy, you're correct. What in the world were they letting a 19-year-old who had zero experience that have such a big role? I mean, I saw hundreds of clients, and they would all come in, and again, another cliche statement that you might want to write down. The owner of the bank, who's like a second father to me, said, Caleb, he said, people don't care how much you know until they know how much you care. And he's like, I know that you care, and you're going to do the right thing. And he empowered me and gave me a lot of ability to go out and learn. Now, here's what's really, really important. One of the first things that Jayson Lowe inspired me, I wouldn't necessarily taught me, but encouraged me to ask is what problems are you facing? Like, what are the actual problems that you're experiencing today? And I kind of grew up in a bubble because I'm like, okay, my parents did well and all this stuff. And when I was working at the bank, I had my own 10 minutes of horror when I started experiencing, because I am a feeler, I experienced the problems that people had on an everyday basis as it relates to their finances. And I'm telling you, when we talk about debt, we talk about a lack of like spending and control. When we talk about not understanding how taxes work, I remember someone came in, they worked their entire life. They worked their entire life at a job that they didn't really love. And then they wanted to retire. And I had to be the one, the 19-year-old kid needed to be the one to say, hey, like, I'm sorry, you can't retire. There's no way in the world you can retire. What I wanted to say is, what in the world were you doing? And I just remember time after time after time again, like people are like getting pitched products and people don't have a strategy. And we have business owners coming in who are begging for a loan and then putting money in accounts that they can't even control. And I'm like, again, I'm not going to swear on this call, but I'm like, what in the world is going on? What in the world is going on? And so I made a mission statement, which again is another cliche statement, but it was to help people see and reach their highest potential, because I believe that our ability to show up and be alive is our greatest gifting. And so many people are unable to live to a fraction of their potential. And a lot of it's because of our mindset around money. And so I was just like, you know what? I refuse to make this a reality. And I'm going to dedicate my life to find a better way. And so I started asking questions. And there's a couple themes that you're going to get in this talk. The number one theme I want you to understand is efficiency. It has nothing to do with a product. It has everything to do with a mindset and really an expectation. My favorite definition of efficiency is getting to a desired result and removing all the friction in the way. So think about for a moment, what do you actually want? When we go back to wealth and what is wealth, what is that? What does that look like? Who are you spending time with? What kind of relationships are you having? Where are you able to show up? What talents are you using on a daily basis? What kind of resources are you using to make that happen? That is the desired result, and what friction is in the way. R. Nelson Nash in the book that both Jayson and I love, Becoming Your Own Banker, talks about headwinds. And it uses an example of a plane flying, and it's almost impossible to fly a plane when you have massive headwinds hitting you. And yet, we are all these human beings, these assets in life that are trying to get to point A to where we want to go, and we have the world's headwinds crashing at us. And it became super, super clear, whether it was debt, whether it was our mindset, whether it was putting in money into accounts that we had zero control over, whether it was the lack of understanding how retirement planning actually worked. It seemed to be super overwhelming. And there was a time, Jayson, that I just wanted to get out of the space. I was like, I wanted to be in this space to make a difference. And yet financial advisors seem to just be product peddlers for Wall Street. And I was just like, what's the point? Like, I didn't see anyone empowered to show up as their number one asset and do incredible things. And so this next part that I'm going to share with you, and Jayson, you can make a comment, is how I discovered the and asset and some of the core principles built around this concept of efficiency. Because again, I'm not this like super smart kid. I mean, I asked questions, I was proactive, but I'm like, okay, I want exact opposite of what people are having right now. And it just didn't seem like the theme of efficiency was there. And I'm going to break down my own definition of efficiency in a second that will be really, really clear, because if you can get efficient with your money, you will win by default.
I love that. And when you get crystal clear on what exactly it is that you truly want, your brain immediately gets to work on making it real.
100%.
And what are you seeking freedom from? So when I hear people use language like, I want financial freedom. Well, what are you seeking freedom from? And what do you want freedom to?
Yeah.
So do you want freedom, more freedom of time? Do you want more freedom of money? Do you want more freedom of relationship, more freedom of purpose? And then you hear, I want to escape the rat race. Well, if all you're focused on is escaping the rat race, once you escape it, you're still a rat.
Yep.
And so you've got to get crystal clear on what exactly it is that you truly want. And the financial freedom, I know, and I've shared this with you, Caleb, as well, and we obviously run in the same inner circles. I know a lot of really financially abundant people who are miserable. They make millions of dollars a year.
Yep.
And they're miserable because they haven't truly connected to what they want.
Yep.
And they're not operating in their unique ability. And so if you find yourself that feeling is coming up for you that you're not really truly doing what you want, I could 10x your income tomorrow, and you may end up being more unhappy than what you are now. So it's not just about the money.
All right, guys. So if you haven't noticed already, I like to talk fast. So get your notebook out because we're going to start talking about some key concepts here. And I think you will discover the epiphany that I had over 5 years ago, that I literally was like, if the world knows this, there will literally be a line outside the door, and this will be one of the ways that we could truly solve our poverty mindset and issues in America at the time. I wasn't thinking bigger, but this is some of the things that that had epiphanies around. Number one, majority of people that would come into my office never, ever, ever was asked what they wanted. And so I would just ask people, if money wasn't an issue at all, what would you be doing? And for the first time, we had people like break down, like, and I'm like this 19-year-old, 20-year-old kid, and I'm having like people in their 40s and 50s crying in the office, and people are probably like, what in the world is going on in there? But I just wanted people to realize that there was so much more than just your quote unquote financial goals and distribution strategies. And so what we did was we took ROR, what Wall Street and Bay Street will say is rate of return, and you should put your money in this because it gives you a good rate of return. And we changed that to saying return on result. Return on result. I wanted my clients to be ultra crystal clear on what results that they wanted, and then agree that their financial life should match that. Like, that should not be rocket science. Like, I should not get any applause for that. Like, shouldn't our financial life support the results that we want out of our life? And shouldn't a financially free person be able to get those results faster and more efficiently? Like, that's not, again, rocket science, but Wall Street and Bay Street and typical financial advice does not operate like that. Your personal life is different than your financial life, and you don't talk about finances with your family, your friends, and all that stuff because they're separated, and you wonder why we're all broke. These are a couple of epiphanies that I'm having, and then we're taught about compound interest and compounding, this quote unquote eighth wonder of the world. It's amazing, and then I realized that most people don't even know what compound interest, like what it really is. It's like this magical thing. Well, compounding is a function of a couple things. You need something to compound. Most people don't compound any money because they don't have any money that they're saving or investing. So you need money to compound. Then you need it to actually grow. A lot of people have their money being lost by all kinds of unnecessary things. And then you need to give it time to grow. Well, again, this 19-year-old kid is starting to ask questions. It's like, okay, we're saying compound interest is the eighth wonder of the world. We're putting money into accounts that can lose, are volatile, and we charge fees, okay? And oh, by the way, it's so amazing that we're taking money out when we're hitting retirement. Okay, it's this eighth wonder of the world that we're not getting a fraction of the potential, and then we're killing the goose that's laying the golden egg. So I started asking questions. Okay, compound interest is amazing. It's just a function of math. Have matter grow over time. And over time, you'll get this hockey stick-like growth that is amazing. I understand why it's called the eighth wonder of the world, and yet very few people are getting it. It's interesting. In my book, The And Asset, I give an example of a penny doubling. And a penny, if it doubles for 30 days, is not $5, $10. It's over $5 million. It's amazing. Like, compounding works. And yet, what I did is if you add a 15% tax, if you add a 1% fee, if you just assume 3 days out of the year or 3 days out of the month, it doesn't actually compound, you get a fraction of that. You get like less than 50,000. And so it's just one of those things where it's like, okay, majority of people are being sold a bill of goods and they're not getting a fraction of what they should be. And then the other dilemma that I had, and this was a little bit like, it wasn't as in my face as all these things, but then I realized, like, okay, all the people that I really admire have this thing that I've never been taught, because most financial books in college, they won't teach us this because it's kind of like the dirty secret, but it's a word called control. Control. You want to write that down because we should all be obsessed with this one word. And it's like, okay, interesting. It's like they're telling me, Wall Street, Bay Street, they're telling me to give up control, compound my money, while they do the exact opposite. the banks, like I had a small community bank that I was working at. How did the bank make money? They literally just were institutions that controlled our money better than their customers. And they got to support 24 people, had 3 branches. This is a small community bank that was like rolling in the dough because they were institutions that controlled money. And it just hit me. I was like, wow, like who's teaching us how to control? But then I got a little bit depressed because I was like, okay, if I control money, then I'm giving up compounding. Like if I control money, I'm going to put it in my savings account and I'm going to say, see ya to 30, 40 years of compound interest. And being in my 20s, that's millions and millions of dollars because compounding over a long period of time works because it's math. But at the same time, if I had to choose one or the other, if I had to choose control and invest in myself, invest in businesses, invest in real estate projects, invest in all kinds of things, I would choose control over my life because over the next 30 and 40 years, my wealth would be greater than just compounding. Does that make sense? I want that to resonate with people. Like there's 2 things that are being shared. One side of the group is saying, let's compound your money. Let's compound your money. Your money will grow over time. And that's true. But the real question is it truly compounding? Is it lifetime uninterrupted growing? And in a lot of cases, it's like no. Okay. And then on the flip side, if we do compound interest, if we do pursue that, we're literally giving up control and we're devaluing our number one asset, which is ourself. The final point that I made is that the number one asset in your life is you. Now, Robert Kiyosaki wrote the book, Rich Dad, Poor Dad. Many of you have probably heard of it or read it. And he considers an asset being something that puts money back in your pocket. He talks a lot about, real estate properties and businesses and how a lot of people are not buying assets. And so he should be credited for shifting perspective as it relates to the importance of investing in assets. But the number one asset is yourself because you're the number one variable that puts money in your pocket. You're the one that can actually create value. You're the one that can actually scale things. And yet we're not taught how to empower that and to invest in that. We're not taught to do that because God forbid we learn that. It would take money out of the same systems, the banking system and Bay Street, and they don't necessarily want to promote that. And so I'm learning all this. And if you're a little bit overwhelmed, I was very overwhelmed. I was very stressed and frustrated because I'm like, I want to be efficient. I want to do this the right way. I'm a Christian. I want to be a good steward of the resources so I can bless as many people as possible. And so I started asking questions, and so in that journey, I met a lot of incredible people, including R. Nelson Nash, and I started rethinking my thinking. I started taking a step back and saying, maybe I should be less focused on the investment, the magical ATM that's going to solve all my problems. And maybe I should look within and say, okay, what financial system do I need to be a part of that can remove friction, remove barriers so that I can live an intentional life? Again, shouldn't be rocket science, but asking those questions, like I started asking people that were financial advisors for 20, 30, 40 years. And they're like, well, no, you just put your money in this mutual fund. That's not how it works. And no, don't ask those questions. And no, that's just not how it works. And if you know me at all, I don't like being told that, that's just the way it's always been done. So don't stop asking questions. And so in this next part, I'm going to share my journey of how we discovered the and asset and why I ended up leaving the bank at 21 years old to share this message. Everyone thought we were totally crazy. And now our team is growing. We have clients in all 50 states. We have partnerships in Canada with an amazing Ascendant team. And it's like, I'm so incredibly grateful. But Jayson, any big takeaways from that?
Well, I think a good segue into your next portion of your talk is the reminder that struck me of what R. Nelson Nash taught us. And that was, until you understand the problem, the solution just won't matter to you. And the financial entertainers out there in the world have done a great job continuing to expand the thinking that predominates the world out there. I've got to take all of the control, all of the compounding effect of my money. I've got to take all of that financial energy and transfer it to someone else who thinks that they can do better with it than me. And it doesn't have to be that way. And once you fully understand the problem, the solution becomes clear and you know exactly what to do. And I just thought I'd share that. That's what came up for me at the tail end of what you just shared.
I would love everyone to participate, this will be fun if people don't know exactly like what the and asset is. But when you first heard about life insurance, what was your initial reaction or thought? Life insurance was the worst place to put my money ever. I grew up on, some of you may have heard of Dave Ramsey, grew up on his teaching, and I was like, this is the worst place to put your money. I wanted to put as little bit of money in as possible. I knew term insurance was a responsible thing. Yeah, some people are saying scam, expense. Actually, the expense is probably the best definition because it truly is. It's like, why would I want to pay as little as possible. It was very, very interesting. I love this. Yeah. The initial reaction, I'm spot on. It was that same thing. It was just like, okay, life insurance is important. You want to protect your family and all this stuff. And I never thought twice about it. It was just one of those things where I invested and I wanted to be into real estate and invest in my business. So I had the right mindset. I just never thought twice about life insurance. And then I went to a conference and someone was talking about paying off debt and using life insurance. And I was a little bit irritated by that because I'm like, why wouldn't you just use a savings account? Like, why would you use life insurance to pay off debt? Like, that's the dumbest thing that I've ever heard of. Like, why would you do that? Like, why would you put your money in places where people are getting commissions and it's horrible growth? You'd be, Dave Ramsey says you'd be better burying your money in the backyard than putting your money into life insurance. And I got challenged by one of the gentlemen there, and they said, Caleb, you're thinking about life insurance the typical traditional way. Like, this is not traditional life insurance. And they literally just said, you got to really learn this. Like, before you open up your mouth, like, you got to know what you're talking about, because this thing is like, makes this whole strategy amazing. It's like, this whole strategy wouldn't work very well if you didn't have life insurance. I'm just like what? And so I made a commitment, like a lot of you have already done, and some of you hopefully will have the opportunity to make this commitment. I was like, I am not going to be ignorant. I'm going to learn. I personally think life insurance is a horrible investment, and I don't necessarily see the value in it, but I'm going to learn. And so I went on a journey, and that's when I discovered R. Nelson Nash and many other people. And I realized that, 3,200 banks in the United States today have their safest assets in what's called bank-owned life insurance. And majority of corporations have keep their top people and executives with corporate-owned life insurance. And majority of my mentors that I was learning from saved hundreds of thousands of dollars into life insurance a year. And I started learning case study after case study after case study. I'm a big football fan, and at the time, like, Jim Harbaugh was locked in with a life insurance plan. And then I heard that Walt Disney used life insurance as a part of launching Walt Disney World. And then I was like, Ray Kroc used life insurance policy. And I'm starting to see that. I'm like not able to unsee it. I'm like, wait, maybe I'm asking the wrong question. Like, are people investing money in life insurance? Like, are banks investing their money into life insurance? Are corporations investing their money into life insurance? Are all my mentors, like, are they becoming rich off of life insurance? And I realized I was asking the wrong question. Life insurance is not an investment. It was never meant to be an investment. And people that pitch life insurance as an investment today, I wouldn't necessarily trust because life insurance is not an investment. If you're telling me that life insurance will outperform you as your number one asset, or real estate, or the market, if done well, or any type of other assets, I think you're off your rocker. I think you need to find a different coach. I think you need to find new friends. When I realized that life insurance was not an investment, but it was literally a foundational asset that was better than savings, that would enhance lifetime compounding, give me control to use capital to invest in things like real estate, business, other investments, and give me protection, and give me options for the future, and allow me to save more, and give me lifetime compound growth. I literally, Jayson, was like, this is unbelievable. You're telling me that I can do multiple jobs, I can do multiple things with a dollar. And again, maybe I didn't have to unlearn 10 years, 20 years, 30 years of brainwash, but I'm like, okay, you're telling me I can save money and it will literally grow the rest of my life without, with tax advantage, without fees, without losses. And I can utilize that capital to invest in things I care about to multiply money, and my money still grows? Yes. And that's when I just had my epiphany moment where I was like, I've been thinking about it all wrong. No wonder people think life insurance is a scam, because the growth when you compare it to investments it's okay. When you compare it to a savings account, it's like 400, 500, 600% better. And then when you realize you can get that and utilize that for other things, I was like, okay, I have a moral obligation to share this with the world, because all the people, going back to the problem, all the people that I started meeting with that had these issues, it really came down to they needed to control money, but they couldn't afford to control money because they needed to also compound their money. And if they would have known that the and asset was a place that they could save money and use it, guess who could save more money in that scenario? Everybody that I could have met with. Because you can save more money when you can utilize it throughout your life. And I hope you guys are having some light bulb moments, because if there's a financial strategy and system out there that allow you to compound your money to the day that you die and allow you to utilize that capital throughout your life, could you not save like twice as much or 3 times as much money as you currently are? And that's when, Jayson, I get so excited and passionate about, like, that's when I realized, like, oh, this needs to be shared with, like, people need to hear this, because we can show up more powerfully as our number one asset. Remember my mission to help people see and reach their highest potential. You can unlock like your potential in life by this life insurance policy. Now in the next segment, I'm going to go into some of the myths of life insurance and what you need to know. And obviously you're on this call, so you're already in incredible hands, but I'm going to share with you some high level things, because 99% of life insurance, if it's done poorly, is not what you want. And when you get that right life insurance company with the right life insurance contract and you're coached well, I'm telling you, you're literally given a key that unlocks so many opportunities. So Jayson, I'll let you share that. But that was exactly the journey. And this is the first time I've really shared it in that way, of like me having that epiphany. And that's why I'm such a believer in this, because I was bad mouthing it before I had this epiphany. And now I save over 6 figures a year into it. That's like how crazy I am. But it makes sense, and it's changed my life.
We haven't had a single client contact us in 14 years to say that they were upset that their pool of financial value was increasing every day. Not one. And your money has to reside somewhere.
Yep.
And so this is something that when you were commenting earlier about, folks in the industry like a Dave Ramsey or even a Susie Orman or people like that, I would wager that Dave Ramsey has never met with the CEO or the board of any commercial bank to tell them how stupid they are for buying all that bank-owned life insurance.
Yeah.
I would wager that that's never happened, because as it relates to his at best rudimentary understanding of this tool, he's a fool for making comments like that. And when you recognize what Caleb is about to share and you catch it, your brain is going to normalize it. You just won't be able to reverse it and say, gosh, I'm just going to go ahead and scrub all of that from the hard drive. It's just not possible. And the banks know something. They know something that you don't. And so this empowers you to put yourself in the driver's seat. We talk about that. In fact, it's right on the cover of the book. Picture a day. I want everybody to do that right now. I want you to picture a day when financial control is in your hands, not in the hands of the banks, not in the hands of the government, not in the hands of some temperamental market, but control, financial control. Because Caleb, you and I truly believe, alongside all of our teammates, alongside all of our existing clients, we truly believe that the control should be in your hands, and you have it right here in front of you. All you got to do is wrap your arms around it. Isn't that good?
It's amazing. I love it. If you follow me on YouTube, I have a couple of videos that I go after Dave Ramsey, and I do actually have a lot of respect for his organization and a lot of his teaching, and understanding how most life insurance is sold is horrible, and no wonder people don't know about this. And so it is like, I am very empathetic, because there are a lot of people out there that are probably doing things that are not best for their client. And so for him, he's got to be super consistent. He can't waver. He'll confuse his audience. And so he is harsh at times. And at the same time, I'm super empathetic, because if I'm in his shoes working with the people that he's working with, it's challenging. And so it's just one of those things where I'm going to keep going after him, and he has an open invite anytime to come on the show and talk. And he hasn't given me a call yet. I think we have some work to do, but my hope is to really be able to share with him this, because I think he is doing his audience a disservice by being ignorant, and yet I'm thinking he's going to come around someday.
The good thing about you, and I'm speaking to all of you, the good thing about you being your greatest asset is that you don't have to worry about what other people think.
100%.
And one of the questions that were frequently asked is, Jayson, can you connect me with the right person on your team to help take a look at what exactly it is that I want to achieve financially in my life? And how can this process be an advantage for me? And how can this process help me on that journey and help me achieve, those financial objectives? We have a call designed exactly for that purpose. All that you have to do is text the word schedule to 780-809-4599. Again, that's 780-809-4599. When you schedule a call, it's included with the event. When you schedule a call and you attend the call, so you've got to have some skin in the game. Don't bring any money to that call. Nobody's going to ask you for any, but you'll be couriered a copy of The End Asset for Canadians, a physical copy.
It's incredible.
You'll receive links to additional resources, including past presentations. You'll also get a clarity call with an authorized practitioner on our team who practices what they teach. What a shocker. They actually practice what they teach, and they're the best at it. I have to give all the credit to my teammates. They really, truly are amazing. And you are your greatest asset. So treat it well. Take advantage of that opportunity to schedule a call and get in the driver's seat. Take control. We will help you do that. There's a reason why Nelson named the book Becoming Your Own Banker. The two most important words in that title are your and own. We want to help you to become independent.
Yep.
We don't want to create a dependent relationship with you. We want to help you become independent, and we will give you all the coaching and training and support that you need to achieve that in your life and to create your peaceful, stress-free way of life financially. Take it away, Caleb.
Well, and I don't have to say this, Jayson, but I'm going to. I could work with anybody in Canada with the kind of brand that we have. It wasn't even a question. My name's on the line. I want people to be taken care of. My co-founder, who passed away a couple of years ago, was Canadian, and we worked with Jayson, and it was one of those things where, again, that was when we first got connected, because I was thinking, who in Canada do I trust? Who would I trust with like my own parents? And so I'm grateful to be here. And if you do not have a life insurance contract that's set up, infinite banking and asset, like, you are at the right place, and I would encourage you to take advantage of that. And that is incredibly generous. I selfishly am really happy that you guys are sending books. So thank you. And I am just incredibly blown away by that. So it's an honor to be here. What we're going to do now is we're going to get into Life Insurance 101, and you guys are going to know more about life insurance by the end of this call than majority of people that are talking about it, and way more than Dave Ramsey knows. Okay. And so this is one of those things that, again, I'm going to draw out for y'all. So here's what I want to do. I want to just draw out just a basic understanding, because, again, we like to complicate things a lot in our space, and it's incredibly simple. And I think if you understand how this works and the relationship behind how this works, you're going to be like, oh, I get it. And my hope is that you feel like you get this, you feel like you can be empowered to be your number one asset, but that this can be tactical as well. And so this drawing is one of the few drawings I am capable of drawing. It's a stick figure, and this stick figure represents you. I'm sorry you don't have more muscles. I'm sorry you're not that good looking, but just bear with me, okay? So this is you, this is your family, this is your business, this represents you, okay? Life insurance, we like to like think life insurance is this like magical thing, or like this unknown thing, or like expense, or all this stuff. Life insurance is just a contract. Can you guys write contract? It's just a contract. It's a unilateral contract. What does unilateral mean? It means if you keep up your end of the bargain, that this contract, like the other party's on the hook to keep up theirs. And it's a contract with an insurance company. Okay? That's it. You got a contract. You got an insurance company. Now, if you're there and you're thinking, okay, not all life insurance is created equal. So what are the factors that need to be played to do the infinite banking concept and to do the and asset? Well, you need to have the right mindset, because if you're don't believe that you are your greatest asset, if control doesn't matter to you, and quite frankly, if you're just like, actually control would be a horrible thing, yeah, I don't know if the and asset's going to be the greatest thing for you, to be completely frank. It might be, because it might change your mindset, but I mean, it's just one of those things that will literally enhance and amplify what you're doing. And it's definitely not a get rich quick thing, or it's building the foundation. And so the mindset has to be in place. And if you don't have that mindset, that growth mindset, the and asset's just not a magical thing that's going to change your marriage. It won't. It will when you start changing your mindset. And then the contract is essentially saying, if you do your end of the bargain, the insurance company's on the hook to do their end of the bargain. So there's a couple things I want you to write down, and you might be drawing this out. When we work with insurance companies, it's vital that we work with mutual life insurance companies. Why mutual? Mutual essentially means that we have ownership. We get the benefits. It's kind of like a credit union. We are mutually benefiting in the profits of insurance companies. Why is that important? Insurance companies are incredibly profitable because they have massive blocks of capital that they invest. They get returns for that. They also do other insurance products like term and disability and other things that are also profitable. And that's why people like Warren Buffett invest in insurance companies, because it's an amazing investment. The catch is mutual is not for sale for Warren Buffett. Mutual literally passes on the profits to the policyholders. How do you become a policyholder? You need a contract with a mutual carrier. And so one of the epiphanies is like, okay, like a lot of people that are like, insurance is a ripoff because they're super profitable. All right, let's say that's true. Wouldn't you want to be a part owner of a very profitable business? Like, it's one of those things where you can just like totally, like if you could take someone's talking point and turn it right on their head, you know? And so it's one of those things that's, okay, if mutual insurance is like, that's valuable and that's really, really important. If it's not a mutual company that you're working with, then you have to be really careful about, you know, what's going on. And then the other really important thing is the contract. And a lot of people don't get this right, but not all life insurance is designed equally. And a lot of times people will be with the right company, but the contract is not optimized for cash. And we're just going to do a quick lesson on optimization. A lot of people say, why would I overpay for life insurance? Why would I want to put a ton of money into life insurance? Because it's an expense. And the quick lesson I teach them here is, this is you again, and you have an option. You can pay the max amount or the minimum amount for a certain death benefit. This is death benefit. And a lot of people, until you hear this talk, are like, I want the least amount of premium for the most amount of coverage. I want to be a good dad. I want to be a good mom, but I don't want to have to overpay. And so obviously the insurance company have really smart people that don't have a lot of friends called actuaries. And these people are look at numbers all day long, and they say, well, there's this chance that this person's going to die, and so this is the premium. And so for this type of death benefit, you're going to have to pay $100. So you pay $100 for per month for that death benefit, and you call it a day. And most people don't ask any questions. They shop for the cheapest amount, and it really doesn't matter what insurance company you work with, because most insurance companies are super solid. They're like the safest place to put your money, and so you call it a day. And then you have people like myself saying, I put tons of money into life insurance. Well, I do what's called overfunding. I'm max funding. I'm fully funding a policy. I'm asking the question, how much can I put in? And you know who determines how much we can put in? The government. Well, when the government limits something, and if the government cares about it, that should intrigue us. Like, why in the world does the government care about how much money we put into life insurance? Well, if you said because it's like the greatest place to save your money and it has many tax advantages, you would be correct. And so what's interesting is, if you overfund, let's say you put $10,000 in the same contract, then most of this money is going to what's called cash value and living benefits. These are all the cash-rich benefits that, you know, Jayson and I are talking about. It's all the benefits that you can, you know, use your money and all this stuff. And so the epiphany that I had is, yes, we're calling it life insurance, but really it's a contract with a mutual life insurance company. And when set up and used properly, and when designed properly, it's just an amazing place to store capital. And one of the last drawings I'll draw is when set up and used properly, the typical person takes their money and they'll invest some, and then they'll spend the rest. And this investment will be locked up and do its thing, and and all that's essentially how most people use their money. And what's interesting is when set up and used properly, your dollars are doing how many things in your investments? It's really doing one thing. I mean, it's compounding. It might be compounding a tax advantage way, but it's just compounding for a future date. Your dollars are literally doing one thing. And in some accounts, chastised for touching your money. And it's, we wonder why everyone's broke. It's like you have no money momentum happening. You have no control. You just segment your money, and Wall Street loves it because they get your money for 20, 30, 40 years, and they're able to make a killing with it. And all the and asset is doing is it's essentially saying, hold on, instead of that, what if we took $1 and instead of investing it right away, what if we put it at the foundation in a special life insurance contract that was designed properly? And the moment that dollar gets funded, your money has contractually guaranteed ability to grow the rest of your life. Write down this: lifetime growth. Remember the epiphany that I had? Most people are stopping compounding right here. Right when it starts getting good, it's like, oh, you hit retirement. Let's start taking your money out. Let's kill that goose that's laying the golden egg. And so just like, I know life insurance is not an investment. It's like, if anyone's trying to tell you it's going to outperform investments, I'd be skeptical. But the reality is lifetime growth is going to beat the pants out of, halftime growth. Like, if you can have your dollar compound the rest of your life, majority of people never get that momentum happening in their life. So I would take a shorter lifetime, like a less percentage, and commit for the rest of my life than waiting till retirement or having to totally de-risk my portfolio, because who knows what's happening in other countries and how that's going to affect us. And so the first thing that happens when you fund a life insurance contract is you get lifetime compounding. But then the other thing is you have the ability to control that money while your money grows. How in the world is that possible? It's essentially that you get a guaranteed collateralized loan. And so a lot of people are like, why in the world would I want to pay interest to access my own money? Your money grows the rest of your life, and you get all the benefits of life insurance, and you have access to capital. And when we talk about efficient, it is by far the most efficient way to access money when you look at your whole life. In the first year, doesn't make a ton of sense. You'd be better off paying cash. Every year that goes by when you pay cash, that cash decision gets more and more expensive. How I'll illustrate that is, let's assume for the moment that this is $10,000. It's fake, but it's 10,000, okay? And I go and pay for a car, okay? I actually did this. This one decision I made is going to cost me hundreds of thousands of dollars over my lifetime. I pay cash for that car. Who gets my money now? It's given to whoever sold me the car. They have my money. I have a depreciating asset. My money is never able to be controlled or grow for me the rest of my life. It's gone. Imagine what $10,000 over my lifetime would be worth. Hundreds of thousands of dollars. If I had an and asset set up at that time, what I would do is I would allow my money to grow the rest of my life, pay a little bit more interest, knowing that I have control and growth over my money the rest of my life. Life insurance is not an investment. Life insurance is not a get rich quick. Life insurance is a foundational asset. When set up and used properly, will create efficiency across your entire life. And I'm not finished, okay? At the same time, I was learning about all these, like, quote unquote retirement strategies and all these gurus. And then I started becoming hyper aware of a lot of these gurus were starting to talk about how life insurance could be used as a super bond, as like a part of your portfolio. Ernst & Young, which is one of the top accounting firms, just wrote a white paper, and they admitted that having life insurance a part of your portfolio enhanced your income. My friend Jayson has a whole software program talking about how life insurance can unlock annuities and pensions and give your investments in the market more options, because of it acts as a volatility buffer. And if you have life insurance and you have real estate, it gives you all kinds of options to do, maybe like a home equity or a reverse mortgage and all these things. And in fact, I have another friend who has a whole business that if people that have bad life insurance policies set up, he helps them sell their policy for more money than what they have in it because their death benefit is valuable. Because guess what is one guarantee on everybody on this call? We're all going to be dead. And so having a permanent death benefit should be an asset. It is an asset. And so when I started realizing, and I'm not going to write the word retirement because that's kind of a swear word around here, well, let's just call it future. When I realized that life insurance enhanced my future in ways that I couldn't even calculate, I was like, oh my goodness, you're telling me in some cases we could double our cash flow in the future just by having life insurance because it acts and it enhances and unlocks so many other things in our life? That's unbelievable. And at the same time, the moment you fund an and asset, you're protecting you and your money the rest of your life. You're creating a legacy that's compounded for the rest of your life. And Jayson, I want you to mention after I'm done here talking about your family banking and all the cool things that you're able to do with your family. Like, what's the ROI of teaching your kids how the banking system works and how to control money? Like, that makes me emotional thinking about the freedom that your kids and your grandchildren are going to have because of the legacy mindset. And guess what? The moment you fund an and asset, the moment you fund a life insurance policy, you're not just protecting yourself, you're not just committing to lifetime compounding, you're not just controlling your money throughout your life, you're also having the ability to have a future of, and I don't know what the future looks like, but so many options. And in my book, the more options in the future, the better. At the same time, on average, our clients are able to save over 20% more money each year because they don't have to say, see ya for the next 20, 30, 40 years to their money. What's the ROI of saving more money and compounding that money for the rest of your life? Like, it's pretty incredible. So people are saving more, but the only thing that I care about, to be honest, is this last thing. When set up and used properly, life insurance, if you understand how it works, should unlock your thinking and should help you show up more powerfully as an investor, as a parent, as a business owner. That's the only metric I care about, to be honest. Like, yeah, lifetime compound growth, incredible. Controlling your money, great. Future options, legacy protection, being able to save more money. All things, by the way, will massively affect your bottom line. But remember, back to my definition of wealth. And if the and asset or life insurance or infinite banking doesn't enhance that, we're just like everybody else. But if it can, do you realize that rate of return and all these other benefits don't matter? Like, if all we did was enhance your ability to show up more powerfully, like, I want that to sink in. If all we did was help you live more intentionally, if all we did was empower that, like, that is it for me. Like, that is my mission in life. And so, yeah, it helps that it's like the best place to save your money and all the other benefits that it has. And at the same time, it really registered for me to be like, oh, the real solution is not another widget that does all these things. The real solution is changing people's mindsets. And life insurance is not just a magical thing that will change your mindset, but if you understand how to use it, if you understand the process, it will. And that will change the poverty mindset in our countries. That is like the epiphany. And so I'll finish with this and we can talk and you can ask questions. But what is the ROI of using $1 in multiple places? I need that to sink in. What is the ROI of taking $1 and giving it 6 jobs rather than 1? So when someone says, Jayson, life insurance is a horrible investment. Okay, I agree. It's not an investment. I'll put my money into life insurance and then show me an investment. We have to rethink our thinking. But again, what is the ROI of giving your dollars multiple jobs, and how can that change your thinking, and how can that open up how you think, not just now, but for the rest of your life? Imagine 10, 15, 20, 30 years of that, and imagine by funding that, you're already guaranteeing a future for your family that's brighter, because no one will argue that life insurance, like everyone will say life insurance is great for estate planning and future because it's super efficient how it passes down wealth to the next generation. That's why the Rockefeller family is getting wealthier and wealthier. Why do you think that is? Because of life insurance. So all in all, guys, like that is the epiphany. And it's like, man, like it's so much more than a financial strategy and a process. But the reason I get fired up about this is I'm not pitching a investment that you surrender control over and then we take care of the rest. Like for some of you, you'll do that and that'll be fine. But this is so much bigger. It's not an investment. It's a process. It's foundational. And if we want to get back to the biblical definition of foundational, like there's a lot of powerful things about a solid foundation, and majority of people have non-solid foundations, and they're one event away, they're one crash away, they're one moment away from their life looking different. And imagine how that shows up in your life. And so with that, Jayson, it's an honor to be here, and I'm excited to see where we go with this. But that gives you the story and backstory, some of the key principles of you being your number one asset, being obsessed with efficiency, committing to lifetime compounding, being obsessed with control, understanding that you are your number one asset, making a commitment not to devalue your number one asset, and then why life insurance, when set up and used properly, it literally enhances that. And with that, man, take it away.
Thank you, Caleb. And you know what comes up for me too is what I had shared briefly in my opening remarks, and now it's come together. It's life insurance and real estate. It's life insurance and cryptocurrency. It's life insurance and whatever that investment opportunity is that's tracked you down. Life insurance and taking control of the banking function as it relates to your needs personally and professionally. So that's inside of your family's financial world and inside of your business or businesses. And there is such a significant advantage to teaching this to your family. And, you know, we aptly refer to it as family banking.
Yeah, shocker.
You know,
Not
we're
very
headed,
creative, Jayson.
you know, we're heading out on our annual family banking meeting. It'll be in Cancun, and we leave next Wednesday. And it's all, again, a function of teaching the family to understand that we have two choices. The first choice is to continue transferring all of that financial energy away from our family. And it's the easy choice. Banks make it remarkably simple to deposit money there, to transact, to purchase all those things, and to finance all those things that you need throughout your lifetime. The second choice is that we create this system, which has now grown into 62 policies inside of our family banking system. And the choice that we made was to ensure that all that financial energy stays in the family. And the difference that that makes from a numbers perspective is one thing, but the difference that it makes in family bond and connection and communication changed everything for us and the clients who implement this with their families as well, because it's such a taboo subject. Hey, we shouldn't discuss money because that's a private matter.
Yeah.
That's exactly what the bankers want you to continue thinking, versus having a discussion like the wealthy do. And you know, Caleb, I mean, the wealthy are portrayed as villains. If you watch any Hollywood film where they're dealing with someone who's ultra wealthy, they're normally portrayed as the bad guy or the bad girl, the villain. What is wealth? Wealth is being able to, because of the implementation of this process, having the resources to take my entire family away to such a beautiful destination, to spend quality time with my children, teaching them, and then spending time as a family, getting down to the business of banking.
What's financing your trip to Cancun?
A policy loan.
So you're telling me that money that's going to be beneficial for you and compounding for you the rest of your life is able to allow you to have a family retreat that who knows what's going to be the benefit of that?
Yeah, I'm borrowing against my future dead self. and I control the repayment schedule as well. And so whenever you borrow money, there's terms. Agreed?
Correct.
There's no better terms than your own terms. Isn't that good? There's no better terms than your own terms.
I want to get practical here, and this is important for everyone on this call, okay? The reason you might be asking, why does life insurance give you your own terms? Like why, like every other institution requires you to pay back money at a certain period and all this stuff, your collateral and all this stuff. The reason is life insurance companies that are set up properly are going to win both sides. And so they can play a lifetime game because they're in the business of your mortality.
Right.
So in other words, J-Lo is going to die someday. And so the insurance company is playing a lifetime game and saying, listen, like But that's important that we understand that, because what are the institutions hedge rate of return and mortality? None. Insurance companies are the only companies that do that, and mutual companies are the only companies that allow us to participate in the benefits of both sides.
That's
So
right.
that's where it's like, that's where it's important to me for, it's like, yeah, it's own terms, that's amazing. And like one step further, understanding why that's the case and why life insurance is the only place that you can actually do this. It's not because it's a magical thing. It's because it's literally their institutions that hedge both sides. And so like that's what's so valuable, and that's what unlocks the ability, is to have your own terms and borrow against your dead self. There's no other institution that'll allow that.
That's right. And the impact that that has on the family when they start to see practically real numbers, all the financial energy that's coming back and never leaving the family. And so once you catch that, you want to expand your system. The analogy that we use, Caleb, when we're having these conversations, in the United States, one of the grocery stores that I love to shop at is Publix. It's a great grocery store.
Yep.
And if you and I co-owned a Publix grocery store together, would we ever encourage or permit our family to shop for their groceries at Walmart? No. So if it's true, which it is, that all of your money presently flows through the books of someone else's bank right now, certainly you would have no objection to having all of that money flow through the books of your own system. Why would you ever believe it to be logical that your financial energy should be transferred away when you have a warehouse to accommodate it? And so this is a process. The life insurance policy, the system of policies, is just a tool.
Yep.
The process has absolutely nothing to do with life insurance. Life insurance is the tool that enables us to take control of a function. And it's a function that everyone in attendance tonight is very familiar with. And that function is banking. And most people not only abdicate the responsibility of that function in their lives, but more importantly, they abdicate the opportunity that it represents to take control of it. Yep. And that needs to change. And for all of you who are watching and listening, two things. One, I want to do a quick value check-in on a scale of 1 to 10. 10, you're getting a lot of value this evening. 1, you wish you were doing something else altogether. Secondly, what I need all of you to do, if you haven't already, is to recognize the power in action. There's power in taking action. And you get to build a future that's bigger than your past. How does that make you feel? What feelings come up for you? Take advantage of the call that we've designed to help you take that first step forward in that journey. All that you need to do is text the word schedule to 780-809-4599. Again, that's 780-809-4599. And when you do that, you're going to receive a link. You click the link, and it's going to provide you with the option to book it on a day and time that's convenient for you. You'll have that call, and during that call, you're going to gain even more clarity on the solution to the problem. And then we get to decide whether or not we have and can establish a basis to work together. The operative word is that we get to decide that. We're the buyer in this process, not the seller. When you think of any transaction that you've made in your lifetime, there's a buyer and a seller, right? The buyer is the only party in that transaction that gets to do the rejecting. And so we choose to be the buyer. Now, we haven't met anyone yet that we were unable to help implement this process, but we don't work with everyone that we meet. There has to be a good fit. And a good fit for me is someone who's respectful, responsible, kind, who can make decisions based on fact and not some opinion like that coming from a bonehead like Dave Ramsey. And a person who is committed to taking action. and who's committed to staying disciplined in that action. Those are the optimum mindsets of the people that we most love to serve. And if that's not you, that's okay, as long as you leave happy. But we are going to follow up with you. We're going to email you. We're going to text you. We're going to call you, but we will never be more invested in the creation of your bigger future than you are. The moment that starts happening, we're done. There's a big difference between getting a membership at a gym and actually working out there. Okay. And so we'll coach you, but you're the one that's got to lift the weight. You're the one that's got to implement the process, but we'll teach you how to do it. Isn't that good?
It's amazing, man. I'm grateful for your team.
Let's do this. Let's open it up. Let's get some Q&A. And, all of our teammates are amazing. Yeah. And one of my teammates in particular, who's just an awesome presenter, his name's Vern McCarty, and he's incredible. Vern, if you're still with us, if you wanted to hop on for a moment, and are there any questions that are coming up that we can tackle? Because we'd love to spend the next 13 minutes or so tackling some questions and getting some engagement from our group.
Hey, Jayson, thanks for calling on me. I appreciate it. Happy to be here. Hey, Caleb, I don't think we've ever formally met, so I'd love to connect with you sometime, get to know you better.
It's a pleasure to have you on here.
Yeah, same to you. Very inspiring story, man. Really appreciate you. Our biggest distraction here is taxes, folks.
Oh, can I say something? Can I say something about taxes, Vern?
I would love to hear it, Jayson.
Okay. There's two certainties in life, death and taxes. The only thing that doesn't get worse at any time the government gets together is death.
Yeah.
Isn't that good? You see Caleb's laughing. Look, he's getting a good chuckle out of that one.
So the question is, so we don't have to claim these funds when we file our taxes?
Yeah, when you file your taxes, you're not claiming these funds, meaning my presumption is that the accumulation, so the accrual, the continued daily growth of this pool of financial value, right? It's called cash value. And so in Canada, cash value rises every single day, day in, day out. And so when you wake up the next morning, you have more cash value than you had prior to going to bed the evening prior. And there is no taxation on that daily accrual. And our late mentor, R. Nelson Nash, used an analogy that I think is perfect in this moment. He said, Vern, Caleb, I want you to picture for a moment that we're in the middle of the Sahara Desert. Now we have this massive tent and it's air conditioned. We've got refrigeration. We've got all the food and water, everything that we need. We're just living in the lap of luxury in this tent. And Caleb looks at me and he says, Jayson, slowly look over your left shoulder because a camel just poked its head in our tent. Now, because I'm the biggest of all three of us, 6'3", 250 pounds, I decide that I'm going to take care of that camel in a real hurry. And I look at the both of you and I say, guys, if I don't do something about this camel in a real hurry, we're going to end up with the whole camel in our tent. And that camel is Revenue Canada. So keep the camel out of your tent, and your money must reside somewhere. What better place to have it reside than inside of an entity that is private, inside of a private company? I like privacy, probably better than most people. And so if you want to shield capital from erroneous taxation, and like Caleb said earlier, if the government limits the amount of capital you can put into a contract to maintain its tax exempt status, I think there might be an advantage to getting as much capital into an instrument like that as possible. The bankers are doing it literally as we speak. They're expanding their bank-owned life insurance as a tier 1 asset on their balance sheet. It's one of the best performing assets they have. Why do they do that? There's a reason. And the stockholders would certainly be up in arms, shouting from the rooftops how stupid the bankers are if they thought it was a bad idea. Let's bring this down to the you and me level. You are your greatest asset. And the money that follows you around in your journey called life, that money needs to reside somewhere. So build your own warehouse of wealth and keep the camel out of that warehouse.
Excellent, Jayson. Thank you. I like this question because, again, the title of tonight's event is the "and" asset. So this question is there a way to combine life insurance policy with crypto/Bitcoin?
Yeah, the answer is yes. I don't know if you want me to paint a bigger picture. One of our team members, Dom, who meets with a ton of people in the United States, he uses life insurance and has borrowed against it and has made a killing in the crypto markets. The disclaimer is be very, very careful where you invest your money. And I believe crypto long term is going to have a place where we're at. I feel like a lot of people are going to lose money on the way because they're investing in things that they don't understand that may go up and down because value might be foggy. With that said, I have money in crypto, and I think if you are a believer in it and understand it and you're going to invest in it, the most efficient way to do that is through a policy.
Absolutely. If I can add to that, I would say, well, Jayson said that, we have to store our wealth somewhere. Money has to live somewhere.
Yep.
And then he talked about using the "and" asset and implementing the process of becoming your own banker. Anything that you want to acquire in life today, the foundation of banking that's everything starts with the foundation of banking. And, we can access money to achieve any objective that we want to achieve. Anything that you can achieve with money, we can achieve by implementing the process of becoming your own banker.
Yep.
This is a good one, Jayson. I'd love to hear your thoughts on this.
Sure.
So, we're all talking about crazy things that are going on in the world. And so after seeing the government seizure of the protesters' money, are they able to seize the money in the life insurance policy? Can they change the rules in order to access the funds in the policy?
That's a really good question. What I would say is that the government can set about to do whatever it is that the government wants to do. The key to be focused on is A, probability, and B, whether or not you're dealing with a stock company or a mutual company. Because when you're dealing with a stock company, the operative word being that the company is publicly traded. When you're dealing with a mutual company, you're dealing with a privately held, the operative word being privately. You're not on the government's radar. And so when you are craving fruit and you see the tree that bears the fruit, and that tree is 65 feet tall, are you going to go rent a crane and hoist yourself up to the top of the tree? Or are you going to pick up all the low-hanging fruit? So the more stuff that you've got exposed and you're on the government's radar in that sense, the government's going to walk up with a basket and say, easy, we don't climb up there. let's get all the life insurance contracts are way up there. Let's just get all the low-hanging fruit. Make sense, Vern?
Makes sense to me.
And so could it happen? I suppose anything could happen. Do you think that the sheer weight of the life insurance lobby would just say, oh, sure, yeah, we're just going to step aside and let you encroach on all of these unilateral, legally binding contracts? The government would have to breach a legal barrier through the court system. What happened to people here in Canada with the convoy and the temporary freezing of bank accounts, you have to remember, the moment you put money on deposit with your commercial bank, it's not your money anymore. You become an unsecured creditor of the bank. And so when the Emergency Act was invoked, that was low-hanging fruit. Whereas when you put premium into a life insurance contract, you are the owner. The insurance company is just the administrator. So think about that. Same amount of money, it resides inside of an entity that you're an unsecured creditor of, or it resides inside of an entity that you own. Where would you prefer that capital to reside?
I know my answer. This is really good, Jayson. Thank you.
You're welcome.
The next, this one I think is a great question. I think you'll like this one. It's actually interesting. Can I put my corporate income into a policy? That's where I thought the question ended, and you'd probably just say something like, yes. But he said, and use it to pay employees.
That's a great question. The short answer to that question is yes. I guess the full answer develops in a call, in a conversation. Yeah. And so take some time if you haven't already, but take the time to make sure that you schedule a call so that you can gain additional clarity on how a structure like that could be framed up.
Yeah, Jayson, I've seen several people asking questions relating to, investment returns, and where's the life insurance company putting their money in order to guarantee all these contracts and all those sort of things. I kind of like these types of questions because you have to think differently about how the life insurance company manages money and where that profit's actually being generated from. The mind automatically goes to, clearly they must be investing in great things because they're getting all these returns. But one of the things that the life insurance companies are so great at is creating multiple income streams. Pick up any book, any financial guru on the planet that's teaching you how to create wealth. One of the things you're going to hear is multiple income streams. So can you just speak to that for a second, Jayson?
Life insurance companies continue to be the most financially solvent institutions on planet Earth. Life insurance companies cannot inflate their money pool. They're not creating money where no money existed before, like commercial banks do. That in and of itself is so important to understand, because if you think about everything that's transpired over the past century, I want you to really pause for a moment and think about this. Spanish flu, Great Depression, the tech bubble bursting, the financial crisis of 08-09, COVID-19, H1N1, SARS, stock market crashes, the list goes on and on and on. And yet through all of these crises, life insurance companies are the most financially solvent institutions in the world. Where do you want your capital residing? And when you talk about rates of return and you talk about using that language, that's a comparison mindset. If I put my capital into the life insurance company, what's the rate of return going to be as compared to putting the capital to work in real estate or bullion or crypto or whatever that is? There's no comparison to draw. If you understand the problem and you understand that this tool called life insurance never has been, never will be an investment. It's an as well as, it's an and asset. I'm going to invest in real estate and have my capital reside in a business that I own. I'm going to invest in cryptocurrency and have my own capital reside in the business that I own. And you're dealing with these life carriers that have never failed to produce a divisible surplus called profit since inception. Have you ever heard of a business failing because it had too much money? Has that ever happened? So get your capital in there.
Yeah.
I have something to add. The golden rule. Anyone, I want participation. When you think of the golden rule, what do you think? This is gonna move, create a massive point of. I'm gonna say this real quick. The golden rule: those who have the gold make the rules. Okay. So I love the question, and I think it's a great question because ultimately, how do insurance companies make money? Obviously, we're a part owner. That's a great question. There's two major areas that insurance companies make money. Area number one is them and the banks have all the money. They have billions and billions of dollars. So you and I, even if we're accredited, have access to better deals than the average people. Insurance companies make us look like fools. They have massive amounts of capital. And so majority of skyscrapers, massive buildings, stadiums are not owned by an individual. Most likely they've been financed by either a bank or an insurance company. So number one, you have massive pools of money, and they're not necessarily getting at crazy rates of return, but they have billions of dollars. And so they're able to create the cash flow game, and it's not only safe, it checks a lot of boxes, but at the end of the day, they're just able to get access to investments that are safe, that create a massive rate of return, but they have all the money. So that's number one. Number two is mortality. It's actual insurance, like the credits, you could think of that. And insurance companies, I believe in Canada, in the US, they have term insurance, they have whole life insurance, they have disability insurance, they have long-term care insurance. And a lot of times mortality will get, anywhere from 12 to 14 to 15% on just that's just the rate of return. When they do underwriting, they want to make sure that they're not doing every dollar for dollar. They're insurance companies, they want to make sure that they are profitable each year. And so if you think about it, not only do we get all the benefits of the unilateral contract, all that stuff, but insurance companies are profitable because they're getting mortality and they're getting all their money invested in opportunities that we can't even touch.
Right.
So those are two really practical ways when you think of like how insurance companies make money. Those are like two ways that that's where they get a ton of money flowing in. And then the third way is every time we make premium payments, majority of people that don't know this, like over 90% of people don't even take a policy loan. And so that's another thing. It's like insurance companies like this, but they don't like, they secretly like don't love. Like if everyone did it, they would be like, I don't know. And so it's like, you also have to realize us teaching you to borrow against and all that stuff is something that not a lot of people are teaching. And so when you have your insurance policy and you're just sending money to the insurance company to die someday, they're able to control that money as well. And so those are like three ways, just to be practical, and like why insurance companies are stable, strong, and the best place to store your capital.
You know, there's questions that come up too, Caleb, around COVID-19 and, you know, the obviously, gosh, you know, so many lives lost.
Yeah.
And what many people don't know is that they were around and operating during the Spanish flu, and they learned some remarkable lessons during that pandemic. Yep. And they engineered pandemic modeling from that day forward into every life insurance policy issued. And so that's why for existing policyholders that were insured when COVID-19 was declared a pandemic, many people were like, oh my God, like if something happens to me, you know, is the insurance company going to pay the death claim? And the insurance company immediately set about communicating to the general public to say, there are no pandemic exclusions in your insurance contract because we've already engineered our mortality experience with something called pandemic modeling. And one of the insurance carriers in the US, forgive me, I can't remember the name of the carrier.
One America.
They came out and were clarifying that these insurance payouts, these death benefit payouts that were rising was from group employment benefit programs. So if you make $50,000 a year and your employer says, hey, we're going to enroll you in the group employment benefit program, and you're going to get 1 year of your salary as a life insurance death benefit, and you don't even have to qualify. There's no medical qualifying. You don't have to go through any paramedical exam. We're just going to take a portion of your paycheck and apply it toward that. Yes, more of those people were dying during the pandemic. That's entirely different than what we're talking about in the use of permanent dividend paying participating whole life insurance contracts. You have to go through underwriting. And believe me, an actuary can tell us with a very scary degree of accuracy how many people in any given gender, age group are going to die in any given year. They just can't tell us who, but they can give us a quantity. And over the past 176 years that these contracts have been available in Canada, the actuaries have developed some pretty good data because they've medically tested and paramedically underwritten millions of insured lives. So that's another reason why these insurance companies remain the most financially solvent institutions in the world.
It's awesome. And speaking of which, Jayson, there's a lot of questions about just kind of in that realm of transparency. Like it's not, this is all public information. This isn't stuff that's hidden under stuff you can find. You can go on the insurance websites. You can see where they invest money. You can see their financial reports. Like this is not secretive stuff, right? It's all public information.
I also, someone just wrote in the comments about Justin Donald. And he wrote a book, Lifestyle Investor. Justin's a personal friend. I actually I interviewed him twice, once in a movie that we're creating. And Justin has used life insurance to fund businesses, real estate. I mean, he even got a policy that wasn't really great, like greatly designed, like not how Jayson and I would have done it. But it's still, I mean, even a poorly designed mutual insurance contract will do good over time, and he's a testimony to that. And so, yeah, great book to check out, and he gets really practical in how he uses his life insurance as an and asset, and it's just a great case study. So I would encourage everybody to check that book out as well and send him some love.
What I like most about his book is that he lays out some very clear rules that he follows. He has specific rules. And I know, Jayson, you follow a similar model, right? When you're going to look at a deal. So
yep,
it's important to set a standard. You kind of already touched on this, but maybe somebody missed it as you were going through. Yes, the policies are all medically underwritten. So regardless of what age you are, the amount of underwriting that's done can be changed based on your age or the amount that you apply for, but the policies are medically underwritten. Just a quick question about premiums. The insurance companies are not too fussy about how you deposit premium. You can do it annually, you can do it monthly, you can do it a combination of both. So that's fairly straightforward. Just looking here, there's somebody asking just about, we may not have talked about this, but just, how much cash value can I borrow? The life insurance companies are contractually bound to lend you up to 90% of the total cash value. So that's good. That's an interesting thing to think about, Jayson. Something and Caleb, I don't know what the rules are in the US, but oftentimes I'm not comparing, hey, life insurance or whatever is better than this or that. But oftentimes we talk about how, what a powerful asset real estate is as an example. But if we have a piece of real estate, I have sparkling credit, I have great income, and I have this piece of real estate that's free and clear, no mortgage. I can borrow approximately 65% of the value. I can register a line of credit against that asset, right? For approximately 65% of the value, because they need to build in for, if the market corrects itself or whatever. But banks are actually chomping at the bit to lend you up to 90%. And correct me if I'm wrong, Jayson, but from what I understand, in some cases, you can access almost 100% of the total cash value in your policy.
Yeah, you can get 100%.
Isn't that something to think about? Just that speaks directly to the strength of that asset. Why on earth would they give you 100% of the cash value? Because they know exactly what's going to happen, right?
Because they know that the life insurance company itself is guaranteeing the collateral for the loan. And they know that the life insurance company is the most financially solvent institution because they're buying the very same product that they're going to allow you to collaterally assign. Here's a fun thought experiment. Pick up the phone, call your corner bank, do that tomorrow and say, would you mind just sharing with me, because I'm considering becoming a customer of the bank. Could you just share with me a breakdown of all the mutual funds that you invest in as a bank? And then could you just share with me all of the alternative investments that you're making as a bank? And then without too much trouble, could you share with me how much bank-owned life insurance you're holding as a tier 1 asset on your balance sheet? I think you'll be pleasantly shocked. No, they'll say, "Jesus, I'm sorry, I didn't understand your question. You want us to sell you some mutual?" No. Can you let me know how? Can you let me know how much of the bank's money you've got invested in the mutual funds that you're selling to your depositors? Something to think about.
Yeah, really powerful stuff, Jayson.
This was fun. Caleb.
This is a blast. Thank you, guys. Thank you.
I appreciate you. And thank you. Thank you for being so generous with your time and with your wisdom. And I am blessed to call you a brother and a friend and a colleague. And the world should stay tuned because we've got some big things planned. And, we're getting a lot of great content out there and educating people. And so, Caleb, thank you sincerely for being here with us this evening. And
thank you, guys. I would highly encourage, if there's like one person on the sidelines, like, I don't know, like, you will not regret having a conversation with someone that can customize a conversation around you and what you want. And so please take advantage. If it's just for the reason that you're going to get a free copy of my book, like that would be do it for me, please. And then the other thing I want to say is, regardless of what you do in life, don't devalue yourself. Know that we have one life. It's super precious. It's a gift. And I see so many people maybe have I get that, and then devalue themselves and the head trash and the conversations they have with themselves and the people that they spend their time with. And if I could encourage you guys to do one thing, it's get really, 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 really intentional about how you live your life and realize that we will die someday. And people are not going to care about your money or your accomplishments. They're going to care about the impact that you've had on their life. Just get really clear on that. And I think all this other stuff, all the other reasons why we do what we do make more sense when we have our priorities really dialed in. And so with that, I'm insanely grateful to be here, and we're not going anywhere. We're going to do a lot of exciting things, so stay tuned. And both Jayson and I are cranking out content on YouTube because the world needs to hear about this. And so from the bottom of my heart, I thank you for all the ambassadors that are here listening. We're incredibly grateful for you. And a lot of times it helps to have people that are the foundation. So thank you. And we're just getting started. So Jayson, what would you say? Buckle up, because we're going places.
Yeah. Go buy yourself one of those NASCAR seat belts and strap yourself in. All right. thank you, everybody. Enjoy the rest of your evening. You made a right decision to be here with us tonight. We appreciate you very much. And I'm looking forward to hearing all of the great feedback from our team on the conversations that they're having with folks like you. And so thanks again for joining us. Have a great evening.